Roku stock is currently trading at $93.55 a share. It's down 78% over the last year. And ARK Invest and Cathie Wood just came out with a $600 price target on Roku for 2026. Is that insane? Or is it actually possible? All right, everybody, if you've watched this channel at all, you know the most important thing for me on YouTube is transparency. I am building this portfolio. We started at $10,000 on February 15th, 2022. Goal is to build it to $1 million in 10 years. We're currently at $66,800. We are down $5,150. If you've been watching and seeing these updates, you know we've made a strong recovery. Over the last week, we're up $5,600, and on the day, we are pretty much flat. You can see transparency is important, disclosure is important. I do not own shares of Roku. These are the companies in my portfolio. This is what we're talking about today. ARK came out and they gave a base case that suggests Roku's share price could reach $605 by 2026. So they laid out three potential estimates: a base case, which is 605, a bear case, which is 100, and a bull case, which is almost $1,500 a share. Their base case of 605 would be 53% annually per year. That would be an incredible return. Based on their 75th and 25th percentile outcomes, their bull and bear cases, 1,500 and 100 a share. That's returns of 88% a year and 3% a year. Just insane. ARK is known for doing these kind of insane price targets. In their model, they looked at 33 independent variables. 28 vary across three cases, so that means they're different in each of the three cases. While they believe video advertising revenue is likely to be the most significant contributor to the company's growth during the next 5 years. In the base case, they have revenue increasing 39% a year to reach $14 billion in 2026. We'll see if anyone else is that bullish. In the bear and bull cases, they think revenue increases at annual rates of 5% and 63% to reach $4 billion and a maximum of $32 billion. So first, let's just look. I don't see any way or any real potential for the bull case. I would not even be concerned with that. What I'm focused on more is just this base case, right? Because that would be an insane return from where they're at right now. And I actually think that $500 to $600 a share is possible in the year 2026 or 2027. Let me show you why. So first of all, Roku, even though it's down a lot, is not a meme stock. This is a very real company with very real revenue. And in every quarter that they were public until the second quarter of 2021, they beat revenue and earnings estimates. They were also positive on earnings per share from the third quarter of 2020 all the way until the fourth quarter of 2021, and that's adjusted earnings per share. They've grown revenue in every quarter since 2018 at over 25% year over year, and for most of those quarters, they grew anywhere from 30 to 50 to up to 79 and 81% year over year. So this is a real company with strong revenue growth. But the question is, can they continue that pace of revenue growth, and can they get to those revenue targets that ARK outlined? Well, if we look at Wall Street analyst estimates, and there's really only a lot of analysts covering it, 14 analysts covering out to 24, the low estimate for revenue is $4.57 billion, and the high estimate is $6.82 billion. But then if they just continued growing revenue really under 20%, which I actually think it's possible they grow stronger than that, out to 27, then the low estimate of revenue, well, we'll go to 26 because that's what ARK is talking about. The low estimate for revenue would be $7.5 billion, and the high estimate would be $8.2 billion. They've got their base case at $14 billion, which is much higher than that $9 billion mark that analysts are currently expecting. But I think that revenue estimate that we just looked at from the analysts was actually a little bit conservative. And I think that, realistically, revenue could be around the $10 billion ballpark by 2026. So I think 14 is a little bit ambitious. All is going to come down to if this company executes or not. And then if we do go into some major recession and ad spending is cut majorly, that would obviously impact this. And that's one thing I feel like, the bear case and probably the base case don't really put into realistic expectations of how a recession would impact Roku. So that's kind of one piece of my opinion right there. Let's look at fast graphs, right? And so first of all, we can see that over the last 5 years since Roku's been public, they have destroyed the S&P 500, even though the stock's down 78%, which is just kind of insane to think about. Roku has compounded annually at 30%, turning $10,000 in 2017 into $35,000 today. S&P 500 would have turned $10,000 into $18,000 today if you count dividends. So 30% versus 12%. So Roku is still dominating the S&P 500, even though it's down almost 80%. But what is realistic and what is likely to happen going forward? Well, we can see we're looking at price sales ratio. Roku has traded, down to a 4, a 3, 3.7 price sales ratio back in 2017 when they first came public. But really since then, since it was sort of a proven business, it's traded anywhere between 7 to 11, I think is kind of a realistic range. And that was back in, 2018 to 2019 before things just got insane. Traded up to 31, which is why it came down so much. It deserved to come down so much. There's no way that a company deserves to be trading at that type of multiple on, this type of revenue growth with the type of gross margin that they have. But all that's done. So what's going to happen moving forward? Right now, it's trading at a blended price sales ratio of 3.9. So in my opinion, that's not overpriced for Roku's business and for the size of the market opportunity that they have. They've had 34% sales growth over this period, revenue per share growth from 2017 to now. But what is likely to happen going forward? This right here has those analyst expectations built in out to 2024 for revenue growth per share. And we see it gets down to 23%. Let's say we want to be conservative and we want to keep that at 20% beyond that. If we look from now until 2026, even if the price to sales ratio was still 4, which I think is reasonable given 20% revenue growth, plus their gross margin is around 50% and could increase to 55, maybe 60% as they get more of their revenue from platform and software type services, then at a price to sales multiple of 4, we're looking at a price of $248 in 2026 for a total annual rate of return of 24% and 166% total return. That's pretty fantastic. Obviously lower than their base case, but still would be a fantastic return from here. What if it trades up to a price sales ratio of 7? In 2026, the price would be $444 a share at a price sales ratio of 7 for a 41% annualized rate of return. That's not ARK's price target, but that's still a fantastic return, and I think it is in the realm of possibility. What could change this outcome? Well, either Roku missing expectations or beating expectations. If they miss expectations, then obviously their revenue number is going to be lower, and that means the price to sales multiple will likely be lower. So let's say that Roku, they hit these numbers, and then for whatever reason their revenue drops to 10% a year from 25 to 27. So to me, this is probably an appropriate sort of bear case scenario. We've got their revenue doing okay for the next 3 years. But then on the back half, 25, 26, 27, I've dropped it down to 10. And then we're taking out to a price sales ratio of 2. You're looking at a total return of 24% through 2027, which is not good, and a total annual rate of return of 4. But when you're considering that that's dropping the price sales ratio down to 2 and pretty horrible revenue growth given the market that they're in, I think that's a pretty good margin of safety. So I'm willing to say that this is my base case for Roku through 2027. I think they're going to grow revenue right about what analysts are expecting over the next 3 years. Base case, taking it down to 20% revenue growth for the next 3 years, and a base case of a price sales ratio of 4 in 2027 gives you a 23% annualized rate of return for a 220% return. That's pretty darn good. Let's see what I think my bull case might be. My bull case for Roku, I'm going to say 25% revenue growth on average from 25 to 27. And I'm going to say a price to sales ratio of 6 at that point. So if you take that out, that's a 36% annualized rate of return from now to 2027 for a 446% return.